focus, the new topic, the subtopic of our this informal webinar series is talking about tokenized sukuk versus traditional sukuk. Uh, we have been talking about tokens, halal tokens. We have been talking even about uh, the uh, Sharia perspectives on tokens, the impact or benefits of these tokens that can add to the economies. We have already discussed about the uh, kind of different contracts that can be underlying under these tokens. Today, our focus is on sukuk. What is sukuk? I think many of the people do know, and I'll elaborate as well. And then we will move forward from this simple or traditional sukuk towards tokenized sukuk. What actually is this, and how does this happen? So this is Dr. Muhammad Umar Rafiq from Karachi, and I think intro has been given. I've been working as a Sharia consultant and Islamic fintech advisor since years. So now let's talk about. Uh, I think if many of the people do know about sukuk, Alhamdulillah, around a decade, there have been some instruments as an alternate of uh, debts and bonds. So, as we all know, that debt-based, interest-bearing traditional bonds are impermissible because they create interest-bearing instruments and interest-bearing they bear interest-bearing contracts, therefore that are impermissible. As alternates to these instruments, the Sharia advisors, the learned scholars have developed sukuk. The sukuk can be based on different kind of structures. Till now, there has been around $1.37 trillion global sukuk market. Malaysia, GCC regions, they have been they are pioneers in these markets. Even there are sukuk available from the Western world. Even some European non-Muslim most countries have also issued some sukuk under these regulations. Pakistan also have issued a number of sukuk. These sukuk have proven to be one of the leading instrument for governments, and they can be used as alternates for T-bills, treasury bills, for short-term lending, and the sukuk can be for long-term lending as well. Uh, there have been annual primary issuance that is projected to reach around 270 billion dollars in couple of years, and this annual issuance is again a huge number because every year there is a shift from these interest bearing debts towards these sukuk, and 85% of share of the global issuance from GCC and Southeast Asia, that is Malaysia and Indonesia, majorly Malaysia as I identified that. So there is a live poll from us. Ahsan, can we run this live poll here? Okay. So the poll is here. You can see the questions. What do you think is the biggest advantage of tokenized sukuk over traditional sukuk? Just having your opinion, and we will discuss this in detail. What do you think? Due to this tokenization, the accessibility will become global, or what do you think the biggest advantage is the fractional investment opportunities for the people who don't have huge amounts of money to invest? Number three is the faster issuance and settlement, which is almost like uh, zero. We can say some minutes or seconds. And the fourth part is increased transparency and 24/7 continuous trading that can happen over tokenized platform. Okay. So most of the people that are around 60% are focusing on the uh, fractional investment opportunities. Uh, I'll have another look on it after a while. Uh, SN bhai, brother SN, can we move towards the slides? Okay, thanks. So now let's talk about the core topic that we are going to cover today. We should, I think, we need to think about the institutional fixed income standards. Uh, as I mentioned that Treasury bills, the even there are U.S. Treasury bonds and other debt-based instruments that generate a fixed income and fixed yield for the investor, and it is for a maturity like 3 years, 5 years, 1 year, or maybe 6 months, a short term one. So in the global market there are some stand instruments available for it. As far as Sharia is concerned, it doesn't allow the interest bearing instruments. So if we see towards the Sharia compliant contracts, we can see murabaha, which is a cost plus financing, in which basically I buy something from the market, let's say on 100 USD, and sell the same to the customer on uh, a margin that is disclosed to the customer. So he knows how much am I earning on this particular sale. So this is called murabaha. Number two is wakala. Wakala is which basically when I buy something on behalf of someone, or when I invest someone's money amount to some funds, to some ventures or venues, and have my share as a fee, wakala fee on it. It can be based on percentage and it can be fixed as well. Number three is ijara, that is lease backed contracts or certificates. If we see the mix of these fixed income compliant contracts, more than 45% is based on murabaha. And actually, because structuring it into the available system is easier than structuring like musharaka or muzaraba. Therefore, many of the initial offerings of any institution are based on murabaha, especially when they are going to convert from some conventional streams to the Sharia compliant streams. They initially go towards murabaha, then they eventually develop the system for the profit and loss sharing models. So muraba is leading, however, 28 and 22% are wakala and ijara. So can we move towards the next slide, please, SL? Thanks. So now, what is a traditional sukuk? A traditional sukuk is basically an which has an underlying contract like murabaha, wakala, or ijara, as I mentioned. And what actually happens that let's take the example of a motorway, and there should be an underlying asset in each and every contract, whether it is asset backed or it is asset based. In any of the case, actually, let's take the example of government of Pakistan, and government of Pakistan wants to raise funds, and it has to have an asset like motorway. What actually it does that it is an SPV, special purpose vehicle, is created for the investors, and they all subscribe to that SPV, and the government of Pakistan actually sells that sale and lease back. I'm just explaining that ijara sale and lease back transaction. that has already been used in the many of the sovereign sukuk in Pakistan. So that SPV buys that particular asset from that government authority, and the amount is basically from investors which are considered as sukuk holders, and these sukuk holders subscribe and pay that amount through that SPV to that government agency, and after acquiring the ownership, actually, they eventually lease the same asset to the government authority, like the NHA, which is responsible for running all these infrastructure and the connectivity systems through roads and highways. So it generates some yield as well, and that rentals, which is given by that government authority to the SPV, are further divided to each and every sukuk holder. Yes, based normally on the prevailing percentages of the contracts, that is Kaibor, and each and every sukuk holder have a return, a fixed return, maybe annually, it can be monthly theoretically. Normal cases, it is annually for 3 years, 5 years, 10 years. So this is a sale and lease back arrangement. And after that maturity period, due to the promise that has been done, and it is said to be compliant by the AOP standards, that this is a, unilateral promise done by one party, the SPV actually sells the whole asset back to the government on that basic price. So this is how a traditional sukuk works. Now, when we are talking about tokenized sukuk, the investors, the normally the micro investors are not able to put their money in these traditional sukuk, because the subscription, the one unit is not a fraction, is normally a huge amount. So any micro investor, or a normal investor, or a normal household person who has, if you talk in terms of PKR, Pakistani currency, then a person who has around 50,000 rupees saving monthly, or maybe 2 3 lakh rupees savings annually, he is not able to pursue this investment. So, what tokenized sukuk can do, basically, this is an on-chain asset tokenization, as we have discussed this concept in the in the previous webinars. So, in tokenized sukuk, actually, underlying assets and is the underlying asset is the asset of the sukuk, because sukuk already has an underlying asset. So, actually, we are using the underlying asset which was underlying for the sukuk for tokenizing this sukuk. So whenever the sukuk process is all done, we can use the same asset for tokenizing it. However, as we all know that there is a smart contract logic to run it on chain, and automated payouts and rules are there. So actually, it that is why it becomes faster than the traditional sukuk, for the clearance, for the payments, for the transfer of money, for the transfer of ownership, etc. All happens in days in traditional sukuk. This happens in minutes in the and I'm just being cautious to say minutes. It can happen in seconds as well. So a tokenized sukuk is a digital security token on distributed ledger, as we know about all the tokens as it happens, and settlement via compliant digital cash stable coins. Now, actually, how to pay? We can use the fiat currency as well, and if we are going towards these stable coins, we can use these as well. So, as we all know now, a tokenized sukuk is a digital security token, because it is backed by an asset created on a distributed ledger and representing verifiable legal ownership of an underlying sukuk. So there should be a sukuk, there should be a legal ownership. So for that legal ownership, actually the regulatory part, regulatory backing should be there, and which is missing actually in many of the cases. But actually, whenever we need to tokenize that sukuk, we need to have the regularization for the token itself. What is the legal situation of that token? So the legal ownership should be there, and it should be verifiable. It's not just like one cannot know how much I own and what actually I own. It should be clear that what is the percentage in the whole asset and how much units do I own. As discussed, it is done through smart contracts, and as discussed, the payment infrastructure can be, and it is around 1.2%, 1 to 2% of the transfer cost that actually happens. So, can we move towards next slide, please? Now, democratizing Islamic capital markets. This was the concept that I was discussing. Now, if we move towards Islamic capital markets in GCC, in Malaysia, in even we take the Dow Jones Islamic Index in Nasdaq, in Pakistan, in other countries, there are huge amounts, and we can differentiate based on these parameters, like minimum ticket size. In a traditional sukuk, as I mentioned, that a normal simple household is not, in many cases, not able to subscribe for the sukuk. However, when we talk about fractionalizing it and tokenizing it and doing it all through an app, actually, as small as $10 token can be bought and sold through that exchanges. And if you talk about target audience, normally traditional sukuks are done by sovereign banks and some of the funds that are working for some instruments. And what actually happens that a person invests his money in funds, and that fund subscribes to the sukuk. So what can happen through that tokenized sukuk rails, that it can be retailed, it can be given to that fractional users, owners, those who are ready to invest 100 USD only, maybe per month, monthly or what. So you can also attract global investors. Yes, this is a very important point, that the remittance, the inward remittance through this tokenization of sukuk is a very profound impact that is important for any of the import based or a dollar fearing country. So whenever we want to bring dollar in, actually we can use this tokenization through which we can bring that money inside Pakistan and inside any country. And many countries, like we can have investment from Africa, where many of the people who are not ready to invest huge amounts but maybe ready for some fraction amounts. Same goes for investor pool. The investors are institutional normally. In tokenized sukuk, the borderless transactions are there, and it is decentralized, as we all know. But there is a governance mechanism. It's not like anyone can do anything. It is always a strong governance mechanism. And as I mentioned, that regulatory authority should be overseeing all this. Uh, so let's complete this as early as possible. Issuance minimums. It's some benchmarks. It has some benchmark when we talk about tokenized sukuk. It will be viable for mixed year issuers, like small issuers as well. So like 1.3 billion adults globally who remain unbanked. Now this is the number of users that can be include in the banking system, that can you can actually track what these 1.3 billion people are doing through their money. 900 million of the unbanked own a mobile phone, and everyone who own a mobile phone actually can use this tokenized sukuk. In the next slide, uh, efficiency gains and automatic settlement. As I mentioned, like when you talk about traditional sukuk, there will be a t plus 0, then t plus 1, then t plus 2, or it can be 3, 4, 5, because when the remittance is there, the money is coming from outside the country in towards the country. It can take days, and that days may vary from the total transaction will be from 3 to 5 days, 6 days. So, what is unique or here in the tokenized sukuk, settlement sukuk, is there will be 0 second. And I think mentioning 0 second is not actually correct. Realistically, you should have at least some seconds. Like for example, when I open a YouTube video, it takes 2 3 4 seconds for me to that buffer. Similarly, the speed of internet actually, which is there, and through that we can do this all in a minute. So settlement acceleration is there, and elimination of intermediaries, which actually reduces the cost from let's say 5% to 1%. So in the remittances cases, so intermediaries are not there. Counterparty risk reduction, because when the parties are less, it is easier for you to verify these parties and eventually give a green flag to them to work. And automated serving, because it is based on smart contracts. In the next slide, uh, actually, some we need to find real-time proof of reserve, because it works 24/7 as a continuous secondary market. It's not like Pakistani stock exchange, which actually does not work after 3, after 4. So this kind of tokenized markets, they work throughout the night, and even if people are they're awake, they can work throughout the night as well. So it also creates the increment in the volume, because when the number of hours are increased, the number of volume that is going to be traded of a certain token increases as well. Secondary market access increases, because many people, for example, a person in US, if he wants to trade in like a stock exchange, he cannot do, because it's not easier for him to do, because all that stock trade time is night in the American sphere. So the access is uh, um, easy and programmable compliance tools. This is what the smart contracts gives the input. In the tech part, the audit should be there. It's not so that whenever we give something to the technology, or whenever we do something through programming, it is always 100% correct. I don't claim that, but actually it becomes easier, it becomes more efficient. But the technology audits should be there. So however, it is easier to once to program these compliance tools, and the system eventually itself checks the compliance. In the next slide, I want to share a use case, and it's not just a use case; it's actually a real case. This is a Khazana national 100 million ringgit issuance of the Sukuk that was tokenized by the Bank Negara Malaysia and the Securities Commission SC in Malaysia. So the issuer and regulator here is Khazana National Berhad via this Danam Capital Berhad in direct collaboration with the Securities Commission Malaysia. And the issuance size was 100 million, as I mentioned, USD, ringgit. And it's a 1 year tokenized sukuk under the sukuk uh, MTN program. The Sharia structure that was used for Wakala Bil Istismar, as I mentioned, that it is when actually an organization that is maybe an SPV or some takes the responsibility of investing your money into some ventures and venues and get the return for you, and they charge a percentage fee for it. The ecosystem execution was that there were some banks, and they actually are the arrangers of this sukuk handling. That was CIMB Group and Maybank. And the tech infrastructure was used same, the DLT, distributed ledger technology platform, and that was on chain. Institutional investors were there are some pension funds and some credit guarantee corporations, and some banks who have this money of many old people, and they eventually invest in these sukuk. What are the key takeaways from this in Malaysian Sukuk is that it was said to be first onshore pilot that validates the cryptographic digital twin on a permissioned DLT while, while retaining the full legal obligor enforceability. As I mentioned, that we need to understand that like cryptocurrencies are not being governed or regulated by the state banks. When these are not being governed and regulated by state banks, actually there is no one where you can go and actually say that it happened with my investment. But when we talk about tokenization and we talk about the tokenization of the sukuk, actually although it is a distributed ledger, but it is regulated, and it has a legal obligor which takes the responsibility uh, to enforce it as per the law. So the regulatory roadmap is the Security Exchange Commission of Malaysia Capital Market. They have their own regulations, and that actually gives a blueprint for us, for any of the Muslim or a non-Muslim country, to actually copy the infrastructure, or copy the process, and issue these kind of sukuks, tokenized sukuk, in their own country. In the next slide, actually, I just want to emphasize the same, that as I mentioned, that in Malaysia there are some um institutional sukuk that are wrapped into digital deposit tokens. If we talk about Islamic Development Bank pilot, they have done a pilot. This is not a full-fledged sukuk, but this is a smart contract asset tokenization. They are already working on it, and automated murabaha lifecycle management and liquidity. In the GCC sector, that is UAE and Gulf hubs, they have been working on some because they have also, like in Dubai, they have permitted the use of some kind of digital currencies as well. So the digital tokens, the digital assets, all is very easy for them to adopt and get these asset backed tokenized sukuk and launched. So the future actually is going towards these kind of tokens, and any of these instruments which have assets on their backing can be linked to this distributed ledger technology, and tokenization for that fractional benefits of the investors. In the next slide, I would like to just wrap this up from my side. uh, Now, actually, we need to focus on the risk as well. This is the last part, and then we will be moving towards Q&A, because today actually we don't have brother Fahad and we will be missing him. But actually, we will be taking your questions, inshallah. So there are three core risk domains we need to focus on. We need to, when actually we move from this traditional path towards the tokenized path. The regulatory part, as I mentioned, the cross-border legal status of the tokens is very important. Actually, when one token is traveling from one place to another, even through that digital sphere, the regulatory backing in country A and country B should be well established, which is missing right now. So even if we are doing it within the country, the regulatory part should be very clear and established. So jurisdiction-based fragmentation may happen, and in two different countries. Number two is the technical risk. Once you go through technology, through that internet and smart contracts, bugs may happen, vulnerabilities are there, cyber attacks may happen. So for all this, we need to have a very strong technical audit, and I'll mention it. Now the third risk is Sharia risk, and since the uh, since the inception from of this Islamic banking or the Islamic finance, actually this is another risk, because we have been uh, because we are aligning our finance with the faith. We need to check that all the financial contracts as per Sharia or not. So we need to check the like the revenue distribution. It should There should be no riba, and there should be no interest bearing instruments. And there, so when we talk about tokenized sukuk, actually we are not promoting the tokenized bonds in the country. In the globally, tokenized bonds are already prevailing, and they have more their presence than the tokenized sukuk. But actually, we are going to promote only tokenized sukuk, and the reason is the tokenized bonds are not compliant as per the Sharia. So there should be an audit, rigorous Sharia governance framework. It can be on chain, it can be off chain, but it should be very rigorous in order to ensure that whatever is happening on these smart contracts is compliant. So we need to have very strong technical audits, regulatory frameworks. Like when we talk about uh, Pakistan, there is PVARA, and in the GCC we have VARA. In the EU we have NICA. In US we have Genius Acts 2025, etc. So there may come some other legislations as well, that and regulations for regularizing all this tokenized sphere. In the next slide, actually, this is just a summary of what we have discussed. That these traditional sukuk actually can be transformed into these tokenized sukuk, and these tokenized sukuk are emerging. This is not only this is the many of the stages are pilot, and some are well launched and established. The minimum ticket is very different, and this is where the technology play its part and creates the usefulness for the investors. Settlement time is very different, and you cannot talk about the percentage of efficiency that is coming in through this due to this speedy settlements. Secondary turnover less than zero point 0.5 daily, and continuous 24/7 exchange trading can happen on this tokenized sukuk. Distribution method is manual in the traditional sukuk. When you talk about tokenized sukuk, there is automated smart contracts, payouts, smart contracts, ownerships, smart contracts, redemption as well. Compliance overhead, manual legal oversight will be there. There can be even the Sharia oversight can be programmed as well, some part of it. However, there has to be some humans, some Sharia scholars, not only the AI, not only the programmed softwares to check the complete system. So this was from my side, and I would now like to move towards the Q&A, and let's see how many of our participants have some questions from this topic. Even you can ask something from the previous topics that we have covered as well. Yes, please.
Alright, so thank you very much, Omar Bhai, for your message. And with respect to questions, I'm seeing some questions over here. Let me read them for you,
Okay, there are
inshallah.
questions.
Yeah.
Just wait a minute.
While we run the question, let me run a poll, a quick poll to see a feedback here.
Okay. Yes, yes. You can uh, go towards the poll. Then we will go towards the questions.
All right, inshallah. So I'll launch the poll. All right. So the poll two says, from an investor's perspective, what is your primary concern regarding tokenized sukuk? Is it legal and regulatory uncertainty across jurisdictions? Is it smart contracts, bugs, and cybersecurity risk? This is a very important one. Is this continuous Sharia compliance and governance? This is secondary market liquidity and pricing stability. So there is no right and wrong answer, and we would love you to participate in this poll so that we can see what is your general understanding. These polls are to measure the level of understanding. It doesn't proves anybody right and wrong, and there is no right and wrong answer for these ones. Basically, all of them are true. So it depends. What do you think? What is your primary concern? That's all. Right. Samar Bhai, this says, 67% people says continuous Sharia compliance and governance means they can say smart contracts, bugs, and security is a risk. It can happen, not happen, just like an earthquake. It can happen, not happen. Suddenly, legal and regulatory uncertainty across jurisdictions, not too much because once they establish, they establish. So they don't change so often. And secondary market liquidity, pricing stability, it's also none of the concern. I believe that's the thing that people are more concerned about. Means they are looking forward to having more Sharia compliant issues. So continuous Sharia compliance and governance vote 71% so far. Thank you. And the poll
I
here.
think Brother Hassan, I personally think that the risk one and risk three are of the same nature. It all these based on the regulatory framework and the Sharia framework and the governance, the compliance. So it shows that many of the people are more into compliance and governance, and this should be a higher concern as compared to the tech part or even the stability part, because the risk 2 and risk 4 normally corrects itself as the industry matures. The 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 technology, the stability, the liquidity comes in. But actually the initial entry point is due through that regulatory door and Sharia governance door. Once that door is established, the maturity will come in maybe in years or months. But uh, Making that door available, making that governance intact, making that regulatory regularization, a comprehensive regularization exist, is the responsibility of the again Sharia scholars as well as the regulatory people, the legislators, the ministries, to understand actually what the product is, how it can benefit our economy, and eventually how can we facilitate these fractional small investors into it.
We have questions over here. Say Assalamu
Okay.
alaikum. They are saying, is tokenized bond converted to tokenized sukuk?
Uh, Ismaila, thank you for your question. Actually, uh, uh, when we talk about tokenized sukuk, we are talking about the traditional sukuk being transformed into tokenized sukuk. When we talk about tokenized bonds, yes, as I mentioned, that in the conventional market there are tokenized bonds, and but they are not compliant. And how to convert an interest-bearing debt into a Sharia-compliant debt is a topic of detail. And in a country or an economy where the existing system is going to be transformed into that compliant system like Pakistan, there has been some processes in which through which actually they convert that non-compliant bonds into compliant. Like for example, here in Pakistan, there have been detailed deliberations about the certificates, the national savings certificates, and how actually we can transform these into Sharia compliant certificates. So initially they are interest bearing, they have riba. So we are not talking about tokenized bonds into tokenized sukuk initially, because tokenized sukuk is on a very preliminary stage. So it is easier to transform the traditional sukuk into tokenized sukuk. But theoretically, it can happen that tokenized bonds can be shifted towards tokenized sukuk. But I think prior to this, the traditional bond needs to be transformed towards the traditional sukuk. Then the tokenized sukuk can happen on it.
Right. Omar bhai, next question with respect to the risk coverage. It says, what risk coverage to the investor, especially digital risks?
Muhammad, but actually, as we mentioned that whenever we run something through technology, we add a risk to it. because we want the speed, we want the efficiency. So we basically are adding a digital risk, or as I mentioned, the program run through smart contracts. So how we mitigate that risk is very important. We mitigate that risk through that technical audits. There are technical audits of the blockchain, of the distributed ledger, how smart contracts are working, are they completely intact, and there are some sensitivity analysis as well. So when the tech experts are they are assured about the system that it has no risk, then they issue a technical audit report, and based on that technical audit report, the risk is mitigated. So actually, when we do all these things manually, we do have a risk of making incorrect entries through that manual system. So risk is always there, and we need to mitigate it through that technical audit.
Right. Ahmed Khalil is asking, Assalamu alaikum. Thank you very much for the presentation. My question goes to the issue of partnership and hand holding between established players and those starting now. Is there any avenue where such a matchmaking is taking place currently?
Currently, uh, what I would like to mention as an example is like the example of Pakistan, because the Virtual Asset Regulatory Authority of Dubai, and in Pakistan we have Pakistan Virtual Asset Regulatory Authority. So we need to really learn from the matured markets, and there should be a matchmaking, there should be a hand holding, which can make these easier for these learning economies to adopt the systems. And it is responsibility of both. Not I think the major responsibility is on the learner to and the adopter to check how these changes are happening, and uh, how he can adopt it for his local context. So one example is this, because many of the regulations can be adopted and can also be seen. Even for example, we can see the AOF rules and regulations and Sharia standards. The local boards, the local Sharia boards, adopt these rulings, and sometimes they also intervene and on some clauses, and adopt some clauses and leave some clauses, and that actually can happen in the regulatory part. Apart from that, if you talk about the technology, tech matchmaking, this is more of a tech expert's point. I think they can give some examples on it. And always, I think, if you talk about adoptions, there has to be some matchmaking, and some people teaching or facilitating some others to adopt and learn, and to adopt it into the economy, inshallah.
Right. Well, we have a question here. Um, Basic questions for understanding. What are the key principles that must be preserved when structuring a tokenized sukuk?
uh, as I mentioned, some of them in the initial stage, like if we are running the sukuk on Murabaha or Wakala or Ijara, we need to follow the basic rules of Murabaha, first of all, uh, or like Ijara. So the Sharia compliance of a tokenized sukuk is 90% like the Sharia compliance of the traditional sukuk, because the underlying contract is same. However, when we are going running this through technology and the fractional investor is there, we need to ensure the interest of these fractional investors. So the responsibility of the Sharia board for these sukuk is a bit higher than those who are running traditional sukuk. So majorly the structures are same, but because the system is different, the system risk or the system related Sharia risk are there, and the Sharia board is responsible for it to check the governance system is working, the tokenized governance system is working, as per the rules or not.
All right. Second last question. How should secondary market trading of tokenized sukuk be structured to remain Sharia compliant, particularly when dealing with mixed pools of asset?
First of all, as you mentioned, fixed pool, sorry, mixed pool. There should be no interest-bearing asset, financial asset, or any non-compliant physical asset. So there should be no like no income from bars or some pork related businesses underlying that business. Moreover, there should be no interest bearing instruments inside that pool of assets uh, for the sukuk. Number two is when actually you are doing the secondary developing the secondary market, we need to understand which kind of tokenized sukuk can run on it and which kind of tokenized sukuk cannot. Because when we run the secondary market, actually we buy the share of that particular asset that is underlying under with the system. So for example, in a solemn contract, when I've already paid in advance and I'm waiting for the delivery, so the asset is not there. The asset may not exist. The asset is not in my actual ownership. I have no possession of that asset. So therefore, I cannot sell any part, any share of that asset. So if any sukuk that is structured on any contract which creates nothing but a debt or a gain, although the contract is compliant, but the tokens of that contract cannot be sold on the secondary market. However, and same goes for the sukuk as well. It's not something unique for tokenized sukuk. Any traditional sukuk follows this principle. However, like a musharaka sukuk or a muzaraba sukuk, where like wakala bil istismar sukuk, where the people have invested something in in some ventures, and and there are some underlying assets available, existing, owner owned, and in possession of the authority, then the shares of that particular asset can be traded on the secondary exchange. So we need to check as far as the secondary market is concerned, that which kind of contracts, which kind of sukuk can be traded on the secondary market and which cannot. However, if you talk about conventional market is altogether different. Conventional market creates the financial instruments and sells these financial instruments on premium and on discount. However, in Sharia, it's not allowed to sell these financial instruments on premium or on discount in the secondary market. So this is the core difference, and this has to be followed in the uh, uh, while having the secondary market for the tokenized sukuk for the tokens.
All right. There's one more question here. How should ownership, you say Malkiya, be evident in a tokenized sukuk structured from a Sharia perspective?
This is an important technical question, and many a times when we talk about milkiya or ownership, to many of the system analysts, it is not a major question because they are more concerned about the system. Or actually, when we talk about Sharia, uh, apart from system, the asset itself is very important. The tangibility of that asset, the compliance of that asset, the yield of that asset, the situation of that asset, all these things are very important. So that is why we talk again and again about this milkiya issue, the ownership issue. So as we discussed in the previous webinars as well, that the token itself is the representation of the real tangible asset behind that. So, for example, if the tokenization is done on some real estate property, then actually what I am buying and selling is the undivided share of that real estate, the tangible real estate. It can be some business, it can be some like agri fields, it can be some it can be a pool of many things. However, when I am doing some transaction on that particular token, basically this is the representation of that bigger pool, the undivided share in that bigger pool. So that is why actually now how that Milkia is insured, and for that actually the regulatory part is very important, because when we talk about regulatory, I own a property when I have the papers on my name. So the regulator should work on this part and actually define that whenever I have the token on my name and it is assigned digitally, not on something on paper, but on a system that by the regulator itself, then then actually it should be considered from the legal perspective as well, that I own an undivided share in that particular pool. Uh, so token actually, when I own a token, I own an undivided share in that particular asset, and that asset has to be compliant. That is why there are some details regarding the asset. That asset has to be compliant, how it is giving the yield, etc., etc. And even if the appreciation, the price of that particular asset is going up, how it will reflect into my tokens. And there is a demand for the token itself, so there is a demand and supply of the tokens. So to cut the long story short, if I own a token, I actually own undivided share in the whole pool.
Sheikh, what are the examples of real world assets that have been tokenized so far from around the world? So there are
Many, I think,
many.
very simple, very easy is the real estate property, and because the tangibility, the reliability of that asset is very much there. However, we have gold tokenized a lot, and we have even some agri fields as well that are being tokenized, because it yields every year twice or thrice. And we also have some, as I mentioned, there are some Malaysian sukuk that are also tokenized, which represents a pool of assets. And similarly,
Umar bhai, you're on mute. I think you press a space bar. You're still on mute. Mm,
okay.
okay, that's fine.
So I was telling that commodities are also being tokenized as well. Like cotton exchanges are there, and there are textile exchanges. Even the commodities like grains and sugar, these all can be tokenized as well. So basically, when you are buying and selling the tokens, actually you are buying that undivided share in that in that warehouse where the thousands and millions of sugar bags are available there.
All right. Jazakallah, Umar bhai. Thank you very much for your questions. And I think one last question remaining. That is for the common Sharia mistakes do you see in current tokenizations projects that claims to be Islamic? It could be controversial, but you can. I think if you have some experience on it or you have read, then you can share.
Yes, I
And
think instead of in basically, I will not name anyone, but we should have some data of pitfalls, and a person should be cautious about whenever doing these kind of things. So because it is evolving, and the I think the major pitfall is on the regulator side, that actually it is not. clear and it's not issuing very clear regulations on it. Uh, know what is going to happen. But apart from the issuer side, I think the linkages of the asset with the token is very basic from Sharia perspective. It has to be very strong. It has to be communicated to all the investors. It has to be reliable, and it should not be like that particular gold which you had in vaults, or like that real estate property which you were mentioning that it is behind these tokens that got sold or even like robbed or theft or something. So that reliability and the connection of that asset to the token is very should be very strong. And from my for example, in any of the place where I have the responsibility of overseeing the Sharia issues of any tokenization system. This is a major part, and a Sharia advisor should also intervene in some tech parts as well to understand actually how strong and how reliable is that. Number two is the Sharia structure. One should follow the correct Sharia structure to launch the product. From the investor side, I think they should be cautious enough to check the Sharia boards and before going to some tokenization, because one should go only towards the compliant tokenized assets, not to the non-compliant non-Sharia compliant tokenized assets.
Jazakallah. With that, we reach to the end of the session. Thank you very much, Dr. Mufti Umar, for your time and
Thank you.
knowledge sharing. Unfortunately, Brother Fahad is not with us today, but inshallah, looking forward to seeing him in the coming session. And
Inshallah.
thank you, everybody. I've shared a link in the chat also if you would like to go and watch these videos again or do the masterclass of on tokenization, you can do that. And yes, thank you once again for your time and for your showing your
Thank you.
interest. Assalamu alaikum.
Thank you all the participants. Assalamu alaikum wa rahmatullahi wa barakatuh.